The U.S. economy has recovered enough to be weaned off a huge stimulus program, and that is the view of the U.S. Central Bank, the Federal Reserve. The Fed has spent trillions and trillions of dollars buying up assets so it can help the economy. We call that quantitative easing. Now, ending the program is a sign that the economy is healthier, but it also brings its own unintended consequences. Ryntjes explains.
The $3.5 trillion economic stimulus started under former Fed Chair Ben Bernanke. He wanted to put more downward pressure on the cost of borrowed money after bringing the federal funds rate down to near zero.
He's done a good job in creating a new weapon, if you will, to fight against recessions and slowdowns in the economy. Prior to this, the assumption was all we could do was lower the federal funds rate. But we see now there's something else that we can do.
Since the Fed launched its third spending spree, known as QE3, on Treasury bonds and mortgage-backed securities, the unemployment rate has dropped from over 8% to under 6%. But Professor Rohan Williamson says the correlation with QE is not clear.
I'm sure there's probably some connection, but to credit all of it to quantitative easing may be a little bit strong because we're not sure, because there's some natural changes in economies anyway. And it could be the case that quantitative easing and maybe speeded up things a little bit.
At its meeting this week, members of the rate-setting committee indicated it will be a considerable time before members consider raising short-term interest rates. And economists say the Fed, now chaired by Janet Yellen, is not compelled to do so because U.S. inflation remains fairly low.
The logic of the inflation data would suggest to the Fed that they have more time to prepare for the eventual liftoff. If you add that to the fact you've had all this market dislocation, you can make an argument the Fed may go slower rather than faster, which is the market has already assumed.
In its latest closely watched statement, the committee indicated it's encouraged by recent jobs data and sees sufficient underlying strength in the broader economy. Ryntjes, CCTV, Washington.